Thursday, July 27th, 2017. Monaco 64, home of alternative economics and contrarian views. So earlier today I made a video and the title of it was Long-Term Dollar Top Pointing to Massive Bull Market in Gold and Silver. Well, I've got what I think is more concrete evidence that the dollar has made a long-term top. And why do I say that? Well, I was looking earlier on tonight at the commodities markets, excluding gold and silver. I was looking at crude oil, some of the base metals, and also some of the agricultural commodities, and also at the continuous commodity index. And what is the continuous commodity index? I'll read here from Wikipedia. The Thomson Reuters Equal Weight Commodity Index is recognized as a major barometer of commodity prices. The index comprises 17 commodity futures that are continuously rebalanced. And what that means is that usually when you trade commodities, you have the front month, you've got the back months, and the prices are all different prices. So what they do, they basically rebalance the front month price going forward, so you get like a smoother price, because if you didn't do that, you'd get, very like not very clear picture of the price of the commodity. But anyway, the components are cocoa, coffee, copper, corn, cotton, crude oil, gold, heating oil, live cattle, live hogs, natural gas, orange juice, platinum, silver, soybeans, sugar number 11, and wheat. So we've got a whole basket of commodities, basically about 18% energy, 23.5% metals, 29.4% softs, and 29.4% agriculture. I also made a video about 3 weeks ago on the 6th of July, and I'll put it up on the card. And the title was, "Are we on the cusp of a commodity bull market?" And yeah, interesting. At that time, and now I'll show you what chart of this continuous commodity index. At the time, we were around 1860. That was, I think, the previous close, July 5th was 1860. And you can see now that we're above 19, and it looks like the chart looks quite positive. Longer term, it looks like we bottomed in the beginning of January 2016, which was just a few weeks after gold and silver bottomed. This continuous commodity index, it traded up to July last year to a short-term top there, and like gold, it's come down, and it looks like it's bottomed here. There's quite a sharp drop there in June, and it looks fairly positive now. So we're now at 1904. So that's the continuous commodity index, which is basically the old CRB index. Yeah, and I also spoke about oil, crude oil, and I'll bring up a chart of crude oil. Crude oil, I mean, when you read the news of crude oil, basically one day it's up, one day it's down. You get all these reports after the market closes. And as you can see by this chart here, it's a weekly chart going back to, about 2.5 years. But as we see here, crude hasn't really been going anywhere since the beginning of 2015. We've had like the dip below 40 there in the beginning of last year, and the pop above 50 in the beginning of 2015 as well. We traded slightly above 50 end of last year and beginning of this year, and now, you know, we traded back down, almost down to 40, and we're now rebounding, and we're at 49. This is the September WTI continuation chart. And it looks to me that the key level there is 55.24 or 55.25. If crude oil WTI is able to break through above that level, we could see quite a significant move higher. And why do I say that? Well, because that would be like breaking a 2-year high in crude oil, and you see a lot of momentum traders coming in if we break that level. I know we're still quite far away from there. We first need to get above 50. But yeah, 55.24 then is the key level for crude. And as you can see, crude also bottomed beginning of 2016, about, you know, a few weeks, you know, after gold bottom in 2015, December 2015, at 1,046. So like the CCI, crude also bottomed in the beginning of 2016. So that's also looking very, very encouraging, and encouraging for the dollar bears and the bulls in precious metals and commodities. You know, historically, as the dollar is the reserve currency of the global monetary system. Whenever the dollar goes down, the price of commodity goes up, because most commodities are denominated in dollars. I know the Chinese are trying to start their own, you know, system where you can trade commodities for yuan, but that's not established yet. You know, maybe that's having an impact on the dollar, but as you know, this relationship will still be there. As the dollar goes down, commodities go up, because most people, you know, commodities are priced in dollars. So the other thing I wanted to talk about that's also a little bit related to the precious metals, and in this case silver, is the fact that silver is a constituent in other metals and ores. And I'm taking this from geology.com. And it says here, most of the silver produced today is a byproduct of mining copper, lead, and zinc. So the prices of copper, lead, and zinc are also quite important for silver. So I had a look at copper, high-grade copper, which is traded on the COMEX. And I took this chart, and I was really surprised, because I don't follow it too often. And as you can see, since the 2011, copper's been on a downward trend. But look at this formation. This is a teacup and handle formation bottom, which is quite bullish for copper. And it looks like we're starting to break out in copper here. This is a September continuation chart, looking quite bullish as well. And like oil and the CCI, copper bottomed in the beginning of 2016. So it looks like the commodities bottomed a year before the dollar topped. And that happens. You know, these cycles are not perfect. So that's copper. Probably a lot of you know that a lot of the copper mines also produce silver as a byproduct. The other commodity I wanted to look at is wheat, because I spoke about wheat 3 weeks ago in the video I made about a commodity bull market, and you know, the possibility of a commodity bull market being quite near. And I showed the wheat chart, because wheat had gone up quite a bit. We were above $5. We're now dropped a bit, but it still looks quite positive, wheat. So that's it. Yeah, it looks like commodities, not just the monetary commodities, gold and silver, but also base metals, energy, the softs, agriculturals, are all perking up and looking very positive, and that's another piece of the puzzle about the dollar top that I talked about earlier today. What will that mean? I think that would just mean that the cost of living will unfortunately increase for people who use dollars, and for the whole world, because commodity prices go up. Everyone suffers everywhere, unless their currency goes up a lot. But I think, unfortunately, commodities are going to go up faster than the fiat currencies. And I wouldn't be surprised if there's some coordination, some effort by the monetary authorities to create, this environment. They're, because they're desperate to lift their measures of inflation, which in my book, of course, is not inflation, but that's what they call it. The CPI, RPI, the core PCE, whatever. So yeah, that's what I wanted to talk about. If you enjoyed this video, please like, share, subscribe to my channel if you haven't yet, and follow and watch me on steemit.com as well, STEEMIT.com. And I'll talk to you later. Bye.